Look at this chart, probably one of the most misunderstood indicators in the macro, and it ties directly into everything that we've been talking about on this YouTube channel. Russell 2000, still kind of testing the all-time high territory, has not made the move yet. PMI, especially, the business cycle, everything we've been talking about. This chart that you see here, it's the University of Michigan Consumer Sentiment Index. It basically measures how good or bad people feel about the economy. And here's the funny part. Historically, when people are feeling terrible, and you can kind of get a sense of across the years, you see 1980, that bottom right there, when confidence is absolutely just destroyed, it's washed out, and it's sitting in these extreme pessimistic areas in these zones, it has almost never marked a top of a market. It is usually the beginning of a major move up. So this is lining up very well with the PMI data that we've been just kind of tracking. So I want to discuss that in this video because we are coming to the end of a contraction phase. What it means for altcoins, this chart here, this is the total crypto market cap chart. Here's the altcoin chart. But altcoins like SUI, for instance, I want to talk about specifically in this video. It is very big. It is something we have to pay attention to. I know I'm a bull. I know a lot of people do not like that. But if there's any time to prepare for a bull move, it is right now. It's not after the move happens. It's before PMI turns, before the economy reaccelerates. Markets are, especially the sentiment-driven type of the market, is always backward looking. That's why everybody's so depressed right now. We just went through years of contraction. You see this green line. This is years of contraction. Confidence is completely depressed. PMI is still low. Now is the time to look at risk assets seriously. So let's dive into the video. Hit the subscribe and like on the way in. Here's the chart, just to give you a sense. This tends to happen after recessions and bear markets. Here's what S&P 500 did next. So I actually do want to go back to this first post that we were looking at, and then I want to go into the charts a little bit. Jay said, this time, obviously being sarcastic, this time the bears will be right. Right, guys? I mean, the market is up way too much already. I think part of the confusion is the market is not actually, the market is not up so much. You look at something like the S&P, yes. We got the Mag 7 in there, Google, Apple, Amazon, all those guys. But you go to Russell 2000, and this is something I've been tracking a lot lately, as you know, if you've been watching my videos. This is not really broken into an all-time high move. It's still waiting. It's still pending. And this is the reflection of charts like this, the University of Michigan Consumer Confidence. This is a very strong indication of economic activity, as we've discussed. This is a reflection of the PMI, the Purchasing Managers Index. This is the business cycle chart, years of contraction. So Jay's saying, markets are up so much, right? The markets really aren't up so much. And I know he's being sarcastic, but that's the whole point. As we're bottoming out and we are in extreme pessimistic areas, look at this. That's insane. We are about to get, going into 2026, the ingredients, I should at least say, because I don't like to speak in certainties like it's guaranteed, but we are at least going to get the ingredients. If everything could come together in the best way possible, that's how it's happening. We have the ingredients for the move. So I just wanted to bring this piece of data to your attention because I've not talked about this at all, University of Michigan Consumer Confidence, but it lines up so very well with everything we've been talking about. So let's go to the total crypto market cap chart. To kind of touch on it, this is what it looks like. There's the PMI in green, consumer confidence that we just looked at. It bottoms out late in the contraction phase. The question I want to ask to you right now, where are we in the contraction phase? Here is us starting to bottom out in March 2023, over 2 years ago. This is how long contraction phase has been. So we're talking about consumer confidence bottoms out late in the phase. Well, QT just ended. We are late in the phase. That's where we are. We are at the end of the phase and before PMI starts to turn and expand. And so markets always kind of price that in early. So when confidence is depressed, PMI is still low. And this is what we're seeing right now. That's typically where the big risk asset rallies begin. Now, what does that mean? This is where they begin, everybody. It's the word begin, not where they end. And that's the thing. I think right now, at the end of this phase, And I'm not saying the rally is going to begin tomorrow. It might not be until next year, but we are at this phase where it is the best possible time to focus and look at risk on assets. And so that leads me to this chart. It is the altcoin chart, everything excluding Bitcoin. This is what it looks like through years of contraction. It doesn't even look that bad. I say that a lot, but I just wanted to kind of give you a visualization of it once more with PMI right there and within context of what we just looked at. And that is to say this chart, the University of Michigan consumer sentiment. And what I want to say is, if you look at these numbers, look at the numbers. April 1980, past signal. Look at the months following. It's green, 24% after a year. And then you can go November 2008, 22%, 1 year. August 2011, 15%. June 2022, 17%. July 2022, 11% after 1 year. So the average is 18.42% when the index is hitting this area. So this is very interesting because you go to our, for instance, SUI risk model. Look at the stat. We're at a 27. I want to look at the SUI charts. Historically, at the risk level 27, the price was higher 79% of the time after 3 months, 100% of the time after 1 year. So we have our risk model for SUI and so many others showing this, that the price was higher at this risk level 100% of the time after 1 year, at the confluence with what this is showing, this chart right here. And that is after 1 year, when sentiment gets to this area, average returns 18.42%. Again, the point of me saying that, it is time, everybody, to look at risk on assets and just put yourself in this scenario where we might be at the beginning or the pre-beginning of an altcoin rally, not the end of some type of bull market, at the beginning. So going back to the risk model for SUI, sitting at a 27, look at this. Now, the SUI risk model is newer, but this is where things like emerging asset theory come into play for our risk models. And if you go look at the chart, I want to mention SUI in this video because it's a really good example of what I'm talking about in this video in terms of risk on, especially in the crypto space, right? We can call other top altcoins risk on, but SUI in particular is interesting to me because it's a new coin. And look at the PMI in the green on this chart. That is, we don't have cycle data, right? We've been in contraction on this PMI this entire SUI chart. So the question is, when this green line, the business cycle, goes into expansion, and the question is, if this, the University of Michigan consumer sentiment, which whenever it bottoms, within a year, we see 18.42% on average, if we're about to see risk on, have a very good year, what does this chart do? Because SUI has been a very nice performer through this cycle. And I just want to remind you, this cycle has been contraction. This cycle has been bear market. This cycle has been years of record-breaking quantitative tightening, which, by the way, just came to an end, like this week. So the question is, SUI risk model sitting at a 27, insane pre-bull market risk score. So much data to suggest what that risk score means. And then the chart completely reset after swing highs from last year, December 2024. I want to point something to your attention. Our risk model, because right now we're at a 27, our risk model, August 2024 on SUI was a 24. It went from basically at that moment, 53 cents to $5.30. It basically almost 10x'd because I should say at that price point it's 537, not 53, but 10x, right? It 10x'd. But remember, it did that move. Everybody, this is not a guarantee, okay? I know this data, it really does, it boggles my mind because it really does give a really nice, for me and my crypto journey, it's a nice risk reward. That's what it is for me. All the things I'm talking about. It's not because I think this is definitely going to happen. I'm just very happy with how things have, it's been very hard. I'm with you. But how things have come together and what we're getting ready to step into in terms of the Fed and everything I've been talking about with liquidity in my previous videos. SUI did a 10x back here, basically within contraction through record-breaking quantitative tightening. What happens when that draining now is over, when we go into expansion and rates keep coming down, and the new Fed that's getting installed right now is looking to be incredibly dovish? What happens to this? Again, no guarantees, everybody. But SUI is something I've been allocating into. I've kind of been talking about that for months on this YouTube channel. And I wanted to spotlight it in this video because it really does a very good representation of what we're talking about in terms of sentiment. But then when we start bringing into play the confluence of PMI data and the business cycle and what altcoins in general are doing and how risk on assets right now should be taken seriously is all I'm saying. And SUI, how it's operated within a cycle of contraction only. I can only imagine what it might do if we get a cycle of expansion and liquidity flowing into crypto. So I wanted to put it out there, everybody. Let me know your thoughts in the comments. I appreciate you. Hit the subscribe if you're not a subscriber. If you're not in our intelligence system, we've got a bunch of assets back there. Start planning because these risk models are showing great scores right now. It's not to say it won't go lower, but start planning, setting your exit strategies to sell and set alerts. We're hitting 60s, 70s, 80s, and the system will alert you, and it'll be a very unemotional data point when we're trying to make those big decisions. So get back there, everybody. We have a free trial going on. Click the link below. And other than that, I just wanted to share this with you. I hope you're having a good weekend. I will see you all in the next video. God bless.